Hello guys, in this video I'm going to show you my latest spreadsheet for consolidating global data into one succinct spreadsheet, and that is Simple Macro Sheet 3.0. There's quite a few updates since 2.0, so I'll just go through each sheet and show you what is possible. A lot of the sheet is free, the whole sheet is free. A lot of the sheet doesn't need any feed in or plug in from Metastock, but quite a bit of it does. So in order for it to be fully operational, you do need a Metastock subscription. That's links in the description down below. Please use the link. Otherwise, let's get through the spreadsheet. So the first sheet is the cycle, the business cycle. It's up to you to determine where we are, which phase we're in, and where you should be deploying capital. But these are some helpful ways of looking at things, and how to be thinking about what actions have been taken by other governments or central banks around the world, and how this will be affecting markets, whether in the beginning phase or late phase where you should be deploying capital. Then the second slide is just generally how markets have developed, or the US market developed over the last over 100 years. And you can see generally stocks go up, so it's always good to be bullish. Don't ever bet against the United States, as Warren Buffett says. Yes, there are drawdowns. There are times to be definitely more short, but in general, to be long is to be better. And to have a really good stock is a really good stock, even if there's a dip in the stock. And just a picture here to manage your emotions. When people are feeling euphoric, you should be thinking opposite. And when people are feeling despair, you should be thinking time to start some positions. And hopefully that should put you in good stead. The next sheet is a summary of all the different data points within the spreadsheet and how they've been looking over the last 12 months or so. And we'll be going over those different sheets, worksheets, as we go through the video. I've also added this at the top. So this is JP Morgan's and BlackRock's Global Macro Outlook. Again, all freely available. So you just click on the links and they should open up. Over here, we've got JP Morgan's here. It's over 100 pages long, I think, where they go through every single data point that they find relevant for any single asset class in the world, and gives you a summary of what they're thinking on every single asset class that there is and where people should be deploying their capital. Similarly, BlackRock has the exact same a PDF, and you can also have a look at their viewpoints. Just click here to download the PDF chart as a PDF document, and then you'll be able to see what BlackRock's thoughts are as well. See if they link up with your global macro viewpoint. So now that's that. Then we have a checklist for FX, for equities, for commodities and bonds. How then to making sure you're ticking off everything before you put a position on, and making sure everything is systemized for your process. Then we've got bulls and the bears, just simple questions asking yourself, what are the bullish reasons for the market? What are the bearish reasons for the market? If a sell-off happens, what questions should you be asking yourself, etc. That's there. And then some helpful quotes from one of the best investors of all time, or traders, Stanley Druckenmiller, are also listed here for for you to read. Then we move on to the yield curve, the all-important yield curve. All three of them. Why pick when you can have all of them on the same chart, right? All time, and then going back, and then a zoomed up inversion. Then we've got inverted bond yields, leading for the big macro data points for, say, the ISM. That was for the 2-year. This is the 5-year, and then you've got the 10-year as well. And then we've got an ISM lead for 18 months as well. This is the 2+10 yield curve inverted, and that'll give you a lead in the ISM. Got leads for the European bonds, the ESI, China as well, different stress indices and how they're feeling, and then stress versus safety, which is seen as in TLT, and how has that chart developed and what does it compare to the SPX in the overall market. Moving along, we've got the main indicators for United States, but for the last 5 years, so you can get a good heat map. And then you've got overall for the all-time US data there as well. We've got bonds, so we're comparing the S&P to the 10-year and then the TLT and spotting a relationship there of risk on and risk off. Here we have the ISM and all the regional PMIs and how they measure up over time. And so you can view that and get a lead on the ISM. You've got all different parts of the Philadelphia Fed, Richmond Fed, ISM descriptions here, so each part of the ISM and what industries they correlate to. Got year-over-year measures for ISM, consumer sentiment, housing, etc. Again, all there, so you can see. Initial permits, the initial estimates on a separate chart. Got NAB, which is housing confidence for the United States. And then we've got consumer sentiment versus unemployment rate, so because they're completely linked to each other. And then again, year-over-year measure there. So again, the employment rate versus sentiment again. And now the ISM year-over-year changes versus the SPX year-over-year changes. And you can see there's a good correlation there. Here we've got the regional PMIs, regional service PMIs versus the NMI. Here with the NMI with, again, some of the regional ones here as well. NMI descriptions as well, so you know which industries they're talking about. US jobs data, this is like the most high frequency data point to see which way the economy is going. Obviously, more people being employed is always better. And then we have more jobs data for the United States. Retail sales in general, but I prefer the red book because it comes out weekly, and again you can see it follows the business cycle in its ebbs and its flows very nicely, so that's always a good measure. The little China data that's out there, all here as well. All the global manufacturing PMIs here, and then an average of them in one chart. Same with the services, same with the comp PMIs. And then we got the ESIs here, the main overarching points, because that dictates all of Europe pretty much. Rather than going into the individual countries, they're just better to stick with the overall. Then ESI confidence, a little bit of money supply data for Europe. Like if you want money supply for all the other regions, you better just get the data from the St. Louis Fed website, or just keep it on the website and just manipulate it on the website like I've shown you in other videos. Here we have Swedish data, which is leading for Europe, so that's always great to keep an eye on. The Eurozoo, Eurocentics as well, and Germany EFO data, Germany zoo data again, and here's just consumer confidence in Germany. Some French data here as well to give you a clearer picture in Europe as well. There we go. We've got Japanese here as well. The interest rates from Japan, Germany, and Europe. And now we've got a list of just the common ETFs for cyclicals and defensives, and then all the ETF data for all the different charts for the United States, the really big ETFs here with a 200-day moving average. So you can see what's going on in a quick snapshot. And then here you've got everything versus the SPY. So a relative chart of all the different sectors or ETFs in the United States. Okay, moving on. European ETFs, I know United States is the best stock market in the world, but that doesn't mean there aren't great stocks in Europe, so they're always worth a look. That's all there. And then the China ETFs, again, you can't ignore China, it's just too massive. But yeah, you can see which sectors are doing really, really well in the United States, China and Europe. Then we've got the nations ETFs, so you can see which nations are doing well. Again, with a 200-day moving average. But yeah, you can stick to just a few. It's completely up to you, however you wish to trade, but it's all in this one spreadsheet for you guys. Emotions monitor, how are you feeling week to week? Or how do you think the market is feeling, etc. It's always a good thing to remember and to note, and then you can look back and see how you can improve if you've made mistakes, or see what you've done well as well. And here is something that comes from this link here, which is CNN's Fear and Greed Index, which changes into a sentiment, which is often not talked about too much, but is also very, very important for markets. So when there's an extreme fear, it tends to provide a buying opportunity. And here I've got snapshots going back to 2011, and then the link here will take you to the most up-to-date readings. And you can see, so in 2020, say the COVID extreme. So if you bought when it was really fearful, you would have done really, really well. Similarly, in 2019 and in other parts, managed to get screenshots of when the fear index was really fearful, and then what happened afterwards, and when they were euphoric as well. So that's a great thing to have a look at, along with the DICs and GECs, which I've mentioned in previous video. You also have the put and call ratio here, the New York Tick Index as well, and S.Skix, which is all sentiment indicators. Okay, and then some more relative charts as well here, XLI versus XLP, so risk on, risk off. Then we have just XLI versus SPX, and you can see it tends to call bottoms pretty darn well. XME, which is commodities versus TLT. And then here we have some really risk on and risk off type asset classes. So TLT versus triple Q is basically complete risk off to the most risk on, which is triple Q, which is technology. And you can see how that's performed relative to the S&P, and it providing good indications for buying the dip, quote unquote. And then you can also have indications for the risks off, so XLP versus SPY, JPY versus AUD, etc., showing why it's risk on and risk off, showing you when it's risk on and risk off. Obviously JPY being risk off and AUD being a cyclical currency, so you can see where different points of when these charts tend to inflect, tends to also be reflected in the SPX as well. SPX versus Bitcoin, triple Q versus Bitcoin. China's best ETFs versus the SPX, and you can see where it tends to be a even more volatile version of when risk off is going to occur. Again, some more there as well. And then finally, overall links. So prediction data, so this is just data that predicts, so the first one is predicting of interest rates, second one is prediction of political outcomes, then Google Trends you can just put in, so the keyword right now tends to be inflation, so you can just chuck in inflation into the Google Trends and see when it's priced in, just like when COVID was as well. Global macro, so you've got St. Louis Fed there, which I go on about because it has great data on there for free. World government bonds shows you world government bonds. OEC data is great as well. And then you've got the New York Fed, which is great for showing you weekly economic data. So it's kind of like the ISM, but on a weekly basis, and gives you a good snapshot of just say if there's a shock to the economy, say COVID, where we're going and how long is this going to continue for. But obviously it being weekly means that it's prone to volatile readings. And then obviously you need to keep an eye on central banks. You've got the Federal Reserve here, ECB as well here. QE history, it's very simple. It's all written on Wikipedia, so you can just read up on there. So there's some links there. ETFs in general, again, all this ETF data, you can just look them up there and then put it into Metastock, or you'll get a complete breakdown of the ETF, and just like you would do with stocks and stuff. PMI data, obviously from market PMI, market economics, and earnings forecasts. So if you want to know different sectors and what their earnings are going forward and what their PE ratios are for things like that, these links here are very, very helpful, and you can get emails sent directly to you as and when things are updated. Any option strategy you ever want to look at is all available on this website for free. Again, with futures, Daniel's Trading is a great website. And sentiment here we have squeeze metrics and money.cnn, which is great for sentiment indicators. And finally, this one here, it shows you what hedge funds are actually owning right now. And it'll show you the top performing hedge funds, what their key ratios are and what their performances are year to date, etc., and what they actually own, all for free. So that's everything, guys. If you like the video, please do give it a like, a share, subscribe, download the spreadsheet, make your life a lot easier, save yourself time and money, and consider getting a Metastock subscription if you think this will be helpful. Other than that, guys, I will see you in the next video.